Money laundering. Definition and scope of money laundering under UAE AML-CFT law. The AML-CFT law and the AML-CFT decision provide a detailed definition of money laundering, which encompasses a range of activities performed with the knowledge that the funds involved are the proceeds of a felony or misdemeanor. The key aspects of money laundering as defined by these regulations are: acts constituting money laundering. 1. Transferring or moving proceeds. Engaging in transactions that aim to conceal or disguise the illegal source of funds. This includes any actions taken to obscure the origin of the money. 2. Concealing or disguising proceeds. Concealing or disguising the true nature, source, location, or method of disposition, movement, or ownership of the funds. This also includes hiding any rights associated with these proceeds. 3. Acquiring, possessing, or using proceeds. Acquiring, possessing, or using the proceeds upon their receipt, knowing that they are derived from illegal activities. 4. Assisting in escaping punishment. Providing assistance to the perpetrator of the underlying crime to avoid punishment, which includes any actions that help the offender evade legal consequences. Definition of key terms. 1. Funds. Defined broadly as assets in any form, including tangible, intangible, movable, or immovable assets. This encompasses national and foreign currencies, documents, notes, and any electronic or digital forms of ownership or rights associated with these assets. 2. Proceeds. Refers to funds generated directly or indirectly from the commission of any crime or felony. This includes profits, privileges, economic interests, or any similar funds that have been converted, wholly or partly, into other forms of funds. Scope of money laundering. Tangible and intangible assets. Money laundering does not solely involve monetary instruments but can also include funds, bank accounts and virtual or cryptocurrencies. Financial instruments, shares, bonds, commercial papers, promissory notes, options, and other negotiable instruments. Contracts and titles, loan instruments, insurance policies, and their assignments. Intellectual property, patents, trademarks, royalties, and licenses. Physical property, commodities, land, precious metals, motor vehicles, art, and other goods used as payment in kind. Irrelevance of transaction size and nature. The monetary value of the transaction, the time frame, and the nature of the funds or assets involved are irrelevant to determining whether a transaction is suspicious and requires reporting. Legal framework and prosecution. Criminal offense. Money laundering is designated as a criminal offense under the AML-CFT law. Its prosecution is independent of the predicate offense from which the proceeds are derived. Suspicion and reporting. Suspicions of money laundering do not require proof of the predicate offense or the illicit source of the proceeds. Suspicion can be based on available information, including indicators or behavioral patterns. National Risk Assessment Insights. Professional third-party money laundering. According to the 2018 National Risk Assessment, professional third-party money laundering is identified as a significant threat in the UAE. This underscores the need for vigilance and robust anti-money laundering measures.